Hello, everyone. I'm Andrew Schmertz. AOL has dialed up a deal to sell itself to Verizon. Verizon Communications is buying the internet media company for $4.4 billion, about $1 billion more than its current market value. The planned sale comes 6 years after Time Warner spun off AOL and 15 years after AOL first merged with Time Warner, considered the worst merger in corporate history. Now, on the news, shares of Verizon closed down about 18 cents, AOL popping, though, over 18%. AOL has transformed itself from an internet service provider to a diversified digital media company driven by ad sales. The big loser in all of this, however, may be Yahoo. Many shareholders of that company had been pushing for an AOL-Yahoo tie-up. Joining us now on the phone is Tim Ghriskey, Chief Investment Officer at the Solaris Group, for his thoughts. Good afternoon, Tim.
Good afternoon.
What does AOL bring to Verizon that Verizon wants? I take it is not those CD-ROMs that AOL used to send out.
No, it sure isn't. This is really a technology acquisition by Verizon. It is AOL's advertising technology platform that Verizon wants. AOL recently put together all of its, unified all of its tech platforms, all of its various point solutions, whether that was video or display or TV, into a single platform so they could deliver that to advertisers in one simplified manner. And it's really that concept and that structure that Verizon is after. A bit of a surprise, this acquisition on first glance, because...
And $1 billion premium, Tim.
Yeah, at a big premium
40%.
Well, back in January, this acquisition was rumored, and Verizon actually came out and said they were unlikely to do this type of acquisition, that they were more likely to partnership with a company, a technology company, content company.
You mentioned, you had mentioned that they want the technology, and that's very interesting because there are some worrisome parts of AOL. You know, 2.2 million people still use AOL for dial-up internet service, and that represents 24% of its revenue. I guess those people are using AOL to download to their 8-track player or something, but because that business is going to go away, but that's a significant portion of revenue. And AOL owns a whole bunch of digital publications, almost all of which are losing money.
They are. I think that isn't really what Verizon is after here. It's more the advertising platform that AOL has developed that Verizon wants. Verizon doesn't want to just be a carrier anymore. They want to have advertising revenue for the content that they push out there to users. So if you get a movie downloaded over Verizon, you will see advertising that they are benefiting from.
Does this balance a little bit of the cut the cord? Verizon obviously is a telecom, but also provides cable television access. Is this a little bit of a reaction to the movement of cutting the cord and a hedge against it?
Exactly, because you do see the cable companies trying to get into this same business. It's a dog-eat-dog world out there. And this is, I think, a very strategic move by Verizon, and a very surprising one.
And not terribly, I guess, expensive for Verizon, has enough cash in the bank. It's interesting, you know, when AOL merged with Time Warner, it was worth $133 billion. So the question is, has Tim Armstrong, the CEO of AOL, successfully turned around this company? I take it this is a win for the shareholders because of the significant value that AOL has gone up and now the premium.
Yes, and I think it's also a win for Tim Armstrong. He is staying on as CEO of this business. So I think Verizon very much believes in him and wants him to lead this whole advertising-driven effort.
And finally, what goes on now with Yahoo? Because there was some push for a Yahoo AOL tie-up. Does Yahoo now have to do a deal?
Well, I don't think they have to do a deal, but I think the same type of deal could be structured by another teleco or cable company with, say, Yahoo. I think it certainly makes Yahoo somewhat more valuable, but I don't think Yahoo has really developed its advertising platform like AOL has. So they've still got a ways to go, but I think it will be a property that I think someone expresses interest in at some point.
Tim Ghriskey, Chief Investment Officer at the Solaris Group. Thank you.
My pleasure.
Turning to stocks, stocks traded water most of the day as the bond market rallied a bit. More on bonds in a moment. Let's take a look at the final numbers, finishing down slightly. The Dow Jones Industrial Average down about 36 and change. The S&P 500 off 612, and the NASDAQ pulling back 1738. Taking a look at commodities, gold closing up 940, a little bit of a rally for gold today, and oil back over that $60 a barrel mark. Just one day after a small business index reported that business owners are feeling down, another index reported slightly more optimistic news. The National Federation of Independent Businesses said its optimism index rose 1.7 points to 96.9. That's still, though, the second worst reading since October. And the so-called JOLTS report, which measures job openings and turnover rates, rose 19% year over year in March. The U.S. Labor Department says private sector job openings increased to 4.5 million jobs, and government jobs also rose. And 2.8 million Americans left their jobs in March, slightly up from February. People quitting their jobs is a sign of a more confident workforce.